Okay, I would like to welcome everyone to tonight's webinar. I'm TC Chambers, and I will be your presenter this evening for this myEcon Personal Financial Success System overview. So, one of our motivated and excited associates invited you on the call tonight so that you can get some information that they believed that can improve your financial life. And they were absolutely correct. See, here at myEcon, we've helped thousands of people nationwide, all across this country, improve their personal finances. Our associates, their professions, range from stay-at-home, mom and dad, to firefighters, to police officers, to educators, doctors, lawyers, federal agents, sales professionals, servers, bartenders, molecular biologists, business owners, and everything in between. Now, their incomes range from minimum wage workers to high six-figure earners. But a few things that they all have in common, one being the understanding the importance of financial literacy, and two, the need for more cash flow to apply to sound financial strategies. So the name of the company, myEcon, is short for My Economy. And that's because each and every one of you on the webinar or just on the conference call itself has an economy, and you're the CEO of that economy. And it's solely your responsibility to ensure the success or the failure of your economy. So at myEcon here, we consider ourselves the personal financial success company. Why? Because that's what we do. We empower people with tools, with knowledge to improve their personal finances to ultimately obtain what we call personal financial success. Now, if we look at myEcon, it's a 12-year-old, debt-free, technology-driven company headquartered in Atlanta, Georgia. Now, to date, the company has helped its associates cash flow, bring home into their households in excess of over $400 million, and we're just getting started. Now, our mission is simple but very powerful, and that's to help people obtain personal financial success. Now, personal financial success is simply having enough cash flow to support one's lifestyle during their working years, as well as during their retirement years. Now, let's talk a little more about personal financial success. In order to attain that financial success, one needs more cash flow to support their current lifestyle. In addition, they need more cash flow to invest to build passive income for retirement, or what we call financial freedom. Now, this passive income we have to build comes from assets that we have to build or we have to acquire. Assets such as stocks, bonds, annuities, retirement accounts such as 401ks, 403bs, TSPs, annuities, real estate, or even residual-based businesses. But one also needs to understand when we talk about these assets, they need to understand what is their target. What do they need to get to in order to be able to obtain personal financial success? What does their portfolio have to equal? So, for example purposes for this particular overview, let's say a person or a family decides that they can live comfortably off of $50,000 a year. Then they're going to need to grow their investment account to about $600,000. So if that investment account earns them 8% annually, that would pay them the $50,000 a year, and they never have to touch the asset. Or let's say they had a real estate portfolio that the profit off of that real estate portfolio paid them $50,000 a year. They would never have to touch that property or sell that property in order to have that money to keep coming in. So it literally would take care of them for the rest of their lives. More importantly, it would take care of their children or their grandchildren after they're gone. So it's very important to understand that retirement and financial independence are synonymous with having assets that bring them passive income. Now, here at myEcon, we use a strategy known as income shifting to empower our associates to generate cash flow in 5 ways. And cash flow is important because it takes cash flow with the appropriate financial strategies in order to help someone achieve financial success. Now, why are both important? If you look, there are athletes or entertainers that had millions of dollars, but for some reason end up financially struggling. Cash flow wasn't their problem. Financial strategy was their problem. And then we all know folks that have worked for city, state, county, even the private sector that worked very hard their entire working careers, were pretty frugal throughout their, working lives, and maybe ended up with about $350,000 in their retirement account when they decide they want to retire. Now, that's a significant amount, but it's not enough. But it's not the $600,000 that we talked about that would yield them that $50,000 a year. So it's important to understand that strategy, financial strategy is important, but also cash flow. So let's take a look at the 5 new cash flows that we help our associates generate. The first is correct tax withholdings. The second, minimizing taxes on business income. The third is generating business income. The fourth is debt elimination. And the fifth and final one is creating passive income. So let's take a look at each of these individually. Now, correct tax withholding is extremely important because, one, the IRS has already stated, and we all know, that Americans lose about a third of their income to taxes. So it's important to be able to shift those tax dollars back into one's check. And correcting tax withholdings is one of the methods that we do that. Now, IRS says 80% of all employees have too much money withheld from their paychecks for taxes. That's 100 million people. Now, why that number is important is that you have to imagine, and most likely agree, that of 100 million people, every profession is represented in that number. Every race, every gender are all represented in that number. Every age group that's working is represented in that number. So that's a whole lot of people. So it can't be a mistake. It has to be a specific reason why so many people have a problem with this. Now, the biggest problem with having this extra money withheld from your check is it causes employees to lose money. And, you hear people say, well, I like getting my tax refund because it's like a forced savings for me, and I like getting all that money back at one time. And that's fine, and I understand people say that, but I really don't believe they understand that there was money lost, opportunity lost by them having the IRS hold their money all year and then them getting it back in one lump sum. Let's explore it a little bit. ROI, return on investment, is why you lose money. For example, the IRS holds on to that money all year. They invest the money, make profit, make income off of that money, and then they give you the money back with no interest. So it's almost as if you gave them an interest-free loan. So that might not feel as bad because you say, I'm still saving my money. But let's talk about more specifically your loss. Let's say your tax refund was $3,600. If you divide that by 12, that would be $300. In that instance, that would mean you had an extra $300 a month withheld from your paycheck, that the next year the IRS gave you it all back. But that's $300 a month that did not go into your investment account, your 401k, your 403b. Remember, you're trying to get the $600,000, so you need all the cash flow you can get your hands on to help you reach that $600,000. Let's look at it another way. That's $300 a month that you don't have coming in your paycheck that you use to pay off debt, saving you on interest on that debt. And lastly, that's $300 a month you don't have in your check that can merely just help you with your lifestyle, help you take care of your family, help you do some of the things that you may want to do that you're a little more limited to now that money is not in your check. So not only does the IRS say, but myEcon also says, it's much better to maximize that take-home pay, which you then can use that extra money, like I said, for investing, eliminating debt, or even lifestyle. Let's talk about the second cash flow stream, and that's minimizing taxes on business income. Now, why is this so important? or how does this happen? The reason this happens is because business owners have access to many more deductions than employees. But many expenses employees routinely spend money on could become tax deductible if the employee was a business owner, even part-time, even home-based. Let's take a look at some of those deductions that can help minimize taxes on business income and thus lower someone's taxable income and allow them to keep more money in their paycheck. Car and truck expenses. See, most people purchase their vehicle for personal use. But if you have a business and you use your vehicle while you're attempting to build your business, then the IRS says expenses incurred while you're doing that can become tax deductible. They'll allow you to either use the mileage method, whereby you can write off up to 55 cents a mile for the mileage that's considered business miles. Or you may have a lease. You may choose to write off the actual expenses of your car. So if you have a lease, you can write off a percentage of your lease payment, insurance, gas, oil, tolls, maintenance, tires, registration fees. If you have a car loan, you can write off a percentage of the interest off of that car loan. You can write off a percentage of the initial cost of the vehicle, depreciation. So bottom line is you are already incurring the expenses of operating your vehicle. But by positioning yourself as a business owner, the IRS says, well, now a percentage of that use of vehicle now can become tax deductible. What other expenses? Tonight, you're calling in possibly on your cell phone or maybe a landline at your house. That means you have the ability to use that means of communications for business, so a percentage of that expense you're already incurring can now become partially tax deductible. If you're viewing this via the webinar, chances are you have internet access. Well, now, since you do use your internet access partially for business because you're a business owner, a percentage of that expense you already incur can now become partially tax deductible. What about travel? Over the summer, people do travel. They travel all year round, but over summer, they're going family trips. You may be going to a family reunion. Well, all you have to do is schedule some business while you're there. Talk to a cousin and say, hey, I'm coming into town. I have to tell you some things about what we're doing. And now your airfare, your hotel, and travel expenses related to that travel now can become tax deductible. What about meals and entertainment? What about you entertaining folks at your house? If you don't have a business, you might have had a barbecue on 4th of July. But myself and other friends and colleagues and other entrepreneurs, when they have guests over the house, let's say for 4th of July, they have a business luncheon. So now the refreshments that they serve their guests, the expense becomes partially tax deductible. What about you stop and get a coffee? You go to a happy hour. You have lunch with a colleague. If you have a business, you have the ability to discuss what you do outside of work, i.e. your business. Now, a percentage of what you paid for your lunch or your dinner now becomes tax deductible. How about if you're going to a ball game, you're going to a concert, you're going fishing, you're going on vacation, you're renting a yacht? If you have the ability to discuss business while incurring those expenses, according to IRS Publication 463, you can make those expenses tax deductible. How about if you're a parent? The IRS says if you're a parent and you have a business, you can pay your children wages to help you in your business. Now, you already know that a lot of times you give your children allowances and money to do things with their friends. You buy clothes for them. You pay for their karate classes. You pay for their daycare. You pay for tuition for private schools. So you're constantly spending money taking care of your loved ones, your children. What IRS says, hey, if you pay them for helping you in your business, you can pay them up to the standard deduction, $6,350. Then the money that you pay them up to that limit, they pay no taxes on, and you get a 100% deduction for it. Now, the money that you paid them, you can use that money to pay for things they do with their friends. You can use that money for their karate lessons, for their daycare, for the tuition for their schools. And now those same expenses now became tax deductible because you paid the wages first. So these are just a few. There's over 475 deductions that independent contractors and business owners have access to. See, knowledge is subject specific, but financial literacy is a must. So you have to understand the advantages of being in the business. It's not just to sell a product, There's some specific tax advantages that just merely by being in business, especially if you're a W-2 employee, that will increase your take-home pay. Now, we typically, using these first two income streams and these first two strategies, help people increase their take-home pay from their jobs by an extra $200 to $800. That's the power of these first two strategies, these first two cash flow streams. Now let's talk about the third cash flow stream, and that's business income. So we help people to set up for-profit businesses, for businesses that bring them additional income into their household. Why? Because that additional income can be used in their strategy to eliminate debt, used in their strategy to further increase their investments in their retirement account to help them get to that $600,000. So we provide a world-class business system. Here at myEcon, we're in the membership business. We're in the financial success membership business. Now, why membership business? Because success leaves clues. See, if you look at a company like Netflix, Netflix is in the membership business. They provide their members with access to entertainment, a variety of entertainment from a variety of medias, but the membership gives their clients access to it. You look at a company like 24 Hour Fitness. They're in the membership business. Their members get access to different areas that provide physical fitness, whether it's a swimming pool, whether it's a basketball court, whether it's a weight room, whether it's aerobics, whether it's a treadmill for cardio, but they give their members access to physical fitness. Well, our memberships give our members access to tools that help their financial fitness. It consists of a suite of products that we design specifically to help our associates improve their knowledge, to give them tools to literally give them ability to improve their financial situation. Income shifting. I briefly talked about it. It's shifting those valuable dollars back into someone's paycheck. Those dollars that now allow them to eliminate debt, that gives them more cash flow. Those dollars allow them to improve or increase their contributions to their 401ks, 403bs, and their investment strategies. Also includes our cash flow manager software. See, the IRS has two requirements in order for you to be able to take those deductions that I'm talking about. One, you need to operate your business with a profit intent. That's why I say we help people start businesses to make money, to make a profit. Two, you have to keep good records. So our cash flow manager makes this process very easy. It allows our associates from the palm of their hand to accurately and meticulously keep records of all their business transactions, their expenses, their income, and it totals them up by category. And it does this from day one throughout the entire year. Now at the end of the year, they take this document and then pass it on to their tax professional. The tax professional has everything they need in an organized format, and now it charges them less to get their tax prepared. Now, it also puts one in a situation that if you ever get audited, that just means they want to look at your records, that your records are audit-proof, because our software is set up to be IRS compliant. It's set up in the format of what they look for. ID theft protection. Why? Because cyber crime is a billion-dollar industry, so you want to protect yourself, just like you protect yourself when you insure your vehicle. You protect yourself when you do life insurance and other type of insurance. So ID theft protection is sort of identity theft insurance. Free and discount legal services. Again, there's times where we need advice on legal matters. Wills, trust, all those things. So many of those things are free. Initial consultations are free. Credit education services. Why? Because credit is a very important part of a sound financial blueprint. So our credit education services provide 26 videos, 2.5 videos of understanding the credit process, understanding your credit score. What are the components that make up your credit score? How do the agencies work? And it's a step-by-step do-it-yourself training tutorial that allows you to be able to strengthen your credit score, to build stellar credit. Lastly is discount travel and corporate perks. Now, not everyone wants to buy or purchase our products in a cluster, together like that, bundled. Some people want to purchase our different products and services a la carte. So what we've done is we've put together a strong, a powerful retail strategy whereby all of the company's products and services are listed on every single associate's website. So now all the associate has to do for those individuals who are interested in our membership, They just refer a client or a customer to their website and say, look, we almost have what we consider a digital vending machine. We have a myriad of products and services from multiple billion-dollar industries that will probably be able to provide you with an avenue to buy whatever it is that you need. For example, someone can go to an associate's website and purchase ID theft protection, $7.95 a month. That's less than half of what they're charging out there on the market, which you see advertised on TV every day, and it comes with a $1 million service policy. So if your ID is compromised, then we pay $1 million to help you get back whole again. Now, our smart money system, that's our do-it-yourself credit education service. CASHFLOW manager software, so you might know someone that's an insurance agent, a realtor, an independent contractor, or even a business owner that needs to keep detailed, meticulous records of their business transactions, their expenses, their income. Well, they can go to your website and purchase the CASHFLOW manager for $10.99. Way less, significantly less, and much more user-friendly than software similar to QuickBooks. Book travel, so they can go to an associate's website, click on that, it'll send them to Priceline.com. Priceline.com already has a phenomenal reputation on the market. So they get Priceline's service, Priceline's discount prices for renting cars, booking hotels, plane tickets, family vacations. They get the discounts from Priceline, and the associate gets commission. Nutrition and healthy beverages, from spray vitamins to supplements with homeopathic remedies for stress, sleep apathy, energy, healthy beverages, such as coffees and teas, all with ingredients from the best ingredients from all around the world. Last but not least, we have a cashback mall that has over 1,000 stores or vendors there. Many of them are household names: Macy's, Home Depot, BrandsMart, Walmart, Best Buy, over 1,000 stores representing over 1 million products. So a customer goes to your website, purchases from your mall. Because they went through your mall, the vendor is going to give them cash back for their purchases. So not only do they get, say, Walmart's discount prices, but they also get cash back from Walmart from going through your site. And you, as the business owner, the site owner, you get commission on that. But what about if you go through Walmart from your site? You're now seen as the customer by Walmart, so you get the cash back, but it's because it's your site, you also get commission on it. So you actually get the double dip. So bottom line is we have a retail strategy that allows customers to purchase from us at their convenience, have the vendors send directly to them, or they get to go pick up from the vendors. They get the discount pricing, and you get commission. Now, let's talk about commission. We have a world-class compensation plan. See, our first leadership position in myEcon is Executive Vice President. That just means that through your website, you have generated up to $200 of personal sales commissionable value. Now, or you've enrolled 2 people in memberships. So you're responsible for about $70 worth of sales. Now you're promoted to what we call Executive Vice President. But now what's significant about that, because now as an Executive Vice President, you earn up to 100% of commissionable sales from your personal site and up to 85% of commissionable sales from your team site. Now, you never have to recruit and build an organization in myEcon to be able to generate and grow those 5 cash flow streams. You never have to do that. But if you see the value of it, it can be extremely lucrative. Now, every time an Executive Vice President, personally enrolls someone in our membership, which is $34.95 a month, you receive $34 of commission. So it's 100% commission. So you can enroll unlimited number of personal marketing directors. So everyone you enroll for $34.95, they give you a $35 commission. Now, you're building a team. So if someone on your team in your base shop, they refer someone to the company got that referral business because of you. So they're going to give you a $25 commission on that particular membership. So you get $35 up front for what you do and $25 for what your team does. So as your team grows, those commissions become larger. But simultaneously, you're building yourself a residual income. See, so imagine earning $5 to $10 monthly on a team that you're building. So let's say over time you built a team of 200 people. So you'd have earned $5,000 up front in cash for those referral fees, but you'd have built yourself $1,000 a month residual income. Now, that doesn't sound like much, but if you ask most people today, if they stopped working today, how much income would they have coming in each month for the rest of the year and all next year? Well, most of them say zero because they weren't building assets, income-producing assets throughout their working career. What happens over time as your group grows to about 1,000? Now, you'd have earned $25,000 up front in referral fees and bonuses, but you now built yourself an $8,000 to $10,000 a month residual income. So the idea is that first, you position yourself in business, which now is going to allow you to shift $200 to $800 back into your paycheck merely by gaining the benefits of being a business owner. So keeping $200 to $800 of the money that you're already making. Then, while you're building your business, while you're learning, while you're teaching other people how to increase their take-home pay, you're simultaneously getting additional cash flow from the upfront bonuses as well as building that residual income. Again, providing you with that third cash flow stream of business income. Let's look at the fourth one quickly. That's debt elimination. So how that works is you take some of that cash flow that you're making. In this example, we encourage you to use $1,000 of that cash flow. And now you're going to start eliminating any debt that you have using a technique, what we call debt stacking. And that means you're attacking one debt at a time. So in this scenario, you have a $17,000 balance on your car loan. Your car note is $545. So you take that $1,000, apply it to that $545. Now you're sending $1,545 a month to the bank to pay on that car. In 12 months, your car note is paid off. You saved yourself over 20 months of $545 payments. And now since the car is paid off, you have the initial $1,000 that you were using to pay off the debt, plus the $545 you was sending for the car note. Now you take that additional cash flow and you apply it to the next debt, which is the Visa, which you have a balance of $8,000 on. You were sending $200 a month to that. So now instead you send $1,745 a month to Visa, and now in 5 months your Visa card is paid off. You saved yourself over 73 months of payments on that Visa. So now you have $1,745 of cash flow. You take that $1,745, you add it to the $1,200 mortgage that you have. So now send the bank for your mortgage $2,945 every single month, and in 68 months, your mortgage is paid off. Now, bottom line, you would have cleared up over $225,000 worth of debt in 85 months. As importantly, you saved yourself over $352,000 in interest and payments, leaving yourself with a cash flow of $2,945. And what that is the $1,000 that you started applying to the debt and the $1,945 worth of debt that you had. So our fourth cash flow stream, you receive that once you've eliminated that debt. Every time you eliminated debt, you increased your cash flow by what you was sending to that particular creditor. Now, let's look at the fifth and final cash flow stream, and that's passive income. So you now have $2,945 of cash flow that you can now use for investing, for building that passive income. So in this example here, we're going to invest it. So we're going to invest $2,945 a month. That's $35,340 a year at 8%. In 10 years, you have over $538,000. In 15 years, you have just over $1 million, $1,019,000. So debt-free, $1,019,000 in your investment portfolio, a cash millionaire. Now, most people are afraid to talk about becoming a cash millionaire or think about becoming a cash millionaire because many of them experience cash flow issues, not having enough money at the end of the month. They have bills, but not enough money. So we solve that cash flow problem. And then while we're solving the cash flow problem, we're educating them on sound financial strategies. So we use a combination of both cash flow and sound financial strategies. Now, some people are stock market and investing adverse, meaning they don't want to do the market. They're afraid of the market, or they just choose not to go that route. But let's say an example number 2 could be you take that $2,945 and you save it every month, but you take that $35,340 and you invest it in a rental property, use it as a down payment for a rental property each year. So in the next 10 years, you get yourself one property each year. And let's say that property yielded you an extra $500 of positive cash flow after you paid the expenses associated with managing that property. That's 10 properties that's bringing you $400 of positive cash flow. That's $4,000 a month residual income right there. Now remember, in our example, you needed $50,000 a month to be able to live comfortably during retirement. Well, that's $48,000 right there. $4,000 a month times 12, $48,000. So there's definitely multiple ways you can do it once you have the cash flow. Now, we already talked about all the benefits. Get back with the person that invited you on the webinar or encourage you to get on the conference call tonight. What they'll do is they'll take you on a tour of their website, so you'll see just what your personal website will look like once you come in business with us. They're going to maybe talk to you a little bit about the back office, all the support they get from their back office, all the training videos, all the step-by-step how-tos of every aspect of our business. See, our business is turnkey. It's like McDonald's Corporation. It's step-by-step-by-step because success leaves clues. So besides the personalized website, you're going to get our world-class business system as well as our financial success membership, which I said comes with the income shifting strategy, cash flow manager software. It comes with ID theft protection, free discount legal services, credit education services, discount travel and corporate perks, and my favorite, valuable tax benefits. In fact, those tax benefits typically earn someone enough cash flow that it's more than the cost of operating their business. Now, a person can get enrolled and get started in myEcon for a one-time price of $34.95. Yes, $34.95, and then after 30 days, you start paying $34.95 a month. So that's $1.17 of operating costs to build your business. That's going to bring you $200 to $800 additional cash flow back in the paycheck from your job, the money that you're already working for. So I'm going to open the lines up and answer any questions anyone has. I want to encourage you to get started in business with us. Allow our system to help you learn and then obtain your financial objectives and financial goals. If you were one of those individuals that are going to make the decision to come in business with us, allow me to be the first to welcome you to the team, welcome you to the myEcon family. So again, I want to thank you for taking time out of your evening, or if you're watching the recorded version of this, out of your day, to listen to how what we feel is the value that we bring to our community. So thank you again, and I'm now going to open the line up for any questions that anyone may have to help them. Okay, give me 1 second, and I'll go ahead and open the line up. Okay, so now